Hello and welcome to this Embark video on secondary tax. Secondary tax is probably one of the most misunderstood concepts of the New Zealand tax system. And hopefully by the end of this video, we have informed you enough so that you understand it and you're no longer afraid of it, because you shouldn't be. Right, so before we dive into an example of secondary tax, let's just understand our tax system a little bit better. So in New Zealand, we have a marginal tax system. So basically what that means for an individual, and we're specifically talking about an individual here, we're taxed at different levels depending on our income. So for the first 14,000, we're taxed at 10.5%, between 14 and 48, it's at 17.5%, and so that difference is we're still taxed at 10.5% for that 14,000. It doesn't increase by 7% when we jump into that next bracket, it's just every dollar from that. 48 to 70 is 30, 70 to 180 is 33, and now we have a tax bracket above 180 of 39%. Now I want to make clear that we're talking about an individual here, and it doesn't matter whether you're getting income from PAYE, shareholder salary, interest, dividends, we are all taxed the same. If two people have income of $100,000, they are paying the same amount of tax, no matter what that makeup is of income. If they've got different PAYE, different shareholder salary, different dividends, different interests, fundamentally it doesn't matter. It's what's your total income, and therefore that's the amount of tax that should be paid. How you pay the tax might be different. So some of those things are taxed at source, PAYE, interest, dividends, and some are shareholder salary, self-employment income, but ultimately you're paying the same amount of tax. So when it comes to secondary tax, basically for each of those brackets, there's a different tax code. So if you know that you're going to be in that bracket and you select the right tax code, you're going to be taxed at the right rate. So if we talk about an example of someone that has a job where they make $30,000 and that's their main source of income, they'll be on the tax rate M, and that M tax rate will take into account the first 14,000 at 10.5% and then the rest at 17.5%. If they also have a second job where they earn $15,000 from that job, therefore the tax rate they will use would be S, because they'll be in that bracket between 30 and 45,000, and that entire $15,000 will be taxed at 17.5%. If it wasn't that, if they used M as well, therefore it's going to be taxed wrong, because they would use some of that would be taxed at 10.5%, and that's what their other job is using up. So let's look at an example. It's the easiest way to prove our point. Two people, Jack and John, really original accountants, remember. Jack has one job and is paid $50,000. John has two jobs and is paid $25,000 for each, so 50 grand in total. Based on what I've said, they're taxed the same. The amount of tax they're going to pay is the same. So Jack would use the tax code M, and his PAYE, so the amount of tax he's paying on a weekly amount, would be $168.26. John has two jobs, right? So therefore one of his jobs will be taxed at M, and the other one will be taxed at S, because he's in that bracket when it comes to S. So his PAYE for his main job is going to be $72.30, and for his second job, it's going to be $91. Now most people, this is where most people kind of go, oh man, that's so unfair, I'm getting taxed so much more when it comes to secondary tax. But hold up. If we compare the 72.30 and the 91 added together, we get 163.30. Well, Jack is taxed at 168.26. So what we're saying is you're being taxed the same. I understand there's $5 difference there. It's random when it comes to the calculations. And because there's a difference there, when the tax return is completed at the end of the year, there will be a wash up. And it might be that one has a refund and one has a small amount to pay. And it will be small amounts because we are on the PAYE system. It should be a few $100s at absolute max. But what we're showing here is that if you do have a secondary job, which is where the word secondary tax comes from, and you're being taxed, yes, you're being taxed at a higher amount if you're in a different tax bracket, but you're not paying any more tax than anyone else that is earning the same amount as you. So that's the key thing that we're trying to get across here. There is no double tax when it comes to secondary tax. It's because you have a secondary job and you're most likely in a different tax bracket, so therefore you need to be taxed differently. Otherwise, there's going to be a significant shortfall and you're going to have a big tax bill to pay at the end of the year. And trust me, Kiwis hate tax bills. So, just to reconfirm, if two people earn the same amount of money during the year, they will pay the same amount of tax. There's no debate in that. There is no debate. That is facts. How you pay the tax is a little bit different. But if you have a second, a third, a fourth job and you're on secondary tax, you are not being punished. That's the key thing that I want to get across here. So if you want to go out and get a job, pay the tax. It's as simple as that. You're not being punished. Hey, look, I hope you found this video useful. Like I said, it's probably one of the most misunderstood concepts when it comes to the New Zealand tax system, or from my point of view, it is anyway. So if you've got any questions or concerns around this, reach out to us, write us a comment. We're more than happy to help out and help you understand it a little bit more. But just remember, don't be afraid of secondary tax. You are not being punished. Thanks, guys. Thanks for watching.